second part, you can say. And we were at this point, okay? And what's happening? Let's see if we everywhere. Just wait a minute. Yep, yeah, live. So there we go. This is a very easy part, but there are some things we have to look into this, which is the profit and growth. We already discussed this. If there is the increasing number of revenue followers, this doesn't mean you are profitable till when they are converting and the cost of the conversion is low than the uh, revenue you are generating. So there's the point, and there's the key that sustainable growth growth funded by real profit, not just extra millions. So we have it here. Let me copy this thing. Okay, I haven't written this one here. Profit day three. It's day three. I think so. We are at day four. Um, I will press keep this way. This is day four. Ah, we are late. You can say that because we have dived deep into many things. So yep, we can say that it is the four stuff or the three stuff in the four. So there's the key. There's a difference between profit and growth, and profit was last over the growth and horizon, and that's the uh, main difference here. Hmm. Shoots direction and this thing. This as well, and I guard, and there's the formula. There's the key. Okay, got it. So we can have a look into this thing. Vanity. Vanity means uh, what what have been seen, but the real value means that what actually the value your business is producing. So that's the key here as well. So I can put this one. Hmm. So you can see that uh, revenue growth, net profit margin pairs, because the revenue can hide your cost. So that's the key. Okay, let's move forward. And we also get it in this way and provided some of the things which we have to write it down and make the journal. Yeah. So the question is this: that how we know that what are the real KPIs we have to look forward for the real growth, and we can have the right picture. As you can see that number of followers can be distracting, and we have to look into the conversion and cost of acquisition of the customer. As similarly for the software and so on. Okay, and there's the key we put here as well. Okay, now what we need to see that how to know that what are the real metrics. We got it, the growth part, financial habit. We have to make sure that what we have to do. So we are going to explore the side number, and then we will sort out. Okay, these are the metrics. Yep. Okay. So you can also noticing go to level these of real metrics and how to write them to keep release. Okay. So there's the key thing. You can see these are the KPIs. Like these are the KPIs. Okay. Yeah. I don't know why the church is taking so much time, but I think so there's it is a new project, so it is so long. You can see that it's so deep. That's why it is processing the context as well. And okay, we okay, okay, guys. So here, that is actually the next step that separates founders who look successful and being successful. When look successful, real profit means you are in reality the successful guy. So here the first thing you have to know that connects directly to the cash flow of property you okay can improve by your team's actions, can be measured objectively and consistently, shows cause and effect, not just surface activity. In simple terms, if it doesn't move your cash, cost, or customer, then it's noise. That's the main thing. That's the point. Yeah, question thing. The three filters to identify the real metrics ask every metric three questions. Money link, action, and comparable over time. Does this affect? Okay, okay. Does this affect how much money I make or keep? Gross margin does. Instagram followers doesn't. So there's the key. Actionable. Can I take a clear action to change this number? Conversion rate can be optimized. Brand awareness is fake. Ah, got it. Comparable over time. Can I track? Uh, can I track it weekly, monthly with goal? Average order value? Yes. And number of meetings? No. Yeah. If I am doing 2 meetings per week, then if I go to the 7 meetings per week, so okay, but is it really making me money or it is really linked with the closing or something like that? If not, then it seems like something. If it fails any one of these filters, it's a went okay. These three filters, it has to be like gross margin can increase by the time it is actionable if you improve our systems and that is over our time as well. If we are going to increase the gross margin over time or not. So that's the three filters we have to know. Okay, great. Examples of real founder metrics, business centric, number of calls made, conversion rate, number of referral business centric of sales. Number of calls, vanity metrics, what are the number of calls, conversion rate deal was divided by leads contacted. So that's a real metric. And CRM, how to track here with the Google Sheet and CRM, marketing website visitor, cost per lead, custom customer acquisition cost, Google Ads dashboard. So here we can see this thing, profitability, total revenue, gross margin number equals to some revenue, which is profit divided by revenue. So it is actually able to see profit margin. And this comes in the P&L. Okay. And potential email subscriber, customer lifetime value, CRM and Excel, operations, tasks done. That's back. Cost per order fulfilled, expense breakup, cash in bank, monthly cash flow sheet, monthly cash flow, inflow minus outflow. Okay, so cash flow sheet, growth efficiency, total ad spend, LTV CSC ratio. So attribute of lifetime value of the customer and cost of acquisition, customer cost acquisition, uh, customer acquisition cost. So the ratio between these things, this is the growth efficiency. So if a customer cost me around $100, but it is going to give me the lifetime value of $1,000, so that ratio is going to be like how much value it is. So it's like it is 10x valuable for me. So if it is going to cost me around $100, but it is only $10. So it is uh, 10 times or 9 times lower. It is costing me. So that's how we can know that if it is good, if it is flowing us or not. So that's the thing. So combine the CRM at the advertisement where we can track it. So here we go. You don't need fancy tools. You need consistency. That's the key. Consistency, the key. Create columns like a gross margin, revenue, uh, P&L, weekly, percentage, something like that. Go actual variance. Update it every Sunday. Your weekly fund of financial review. So metrics. Okay. What we can do here is in this way, automate later optional. So once you know what matters, connect it with tools, these ones. Okay, save here to update how to update key metrics, profit system, dashboard, integrate P&L balance and the um, cash flow, but start manually and financial muscle. We also do our financial muscle manually as well. Yeah. Okay. Founder shortcut. The one metric rule. One metric rule. MTM. I don't know what it is, but we know the same what it is. MTM is going to last week just saying also. Anything that is marked to market. Let's see. For the e-commerce, it can be like gross margin, LTV, CAC, agency revenue per employee, SAS subscription, monthly recurring revenue, coaching info, okay, conversion rate from call, client marketplace, take rate, manufacturing your contribution, margin, find yours, make it their own, not a star. How to keep noise away. Only track 3 to 5 metrics. Focus build majority. Uh, Ignore what can't be measured in dollars or time. Keep emotions up. Compare against goals, not others. Stops vanity competition. Automate reports. Saves decision energy. Revisit monthly. Adjust metrics as business evolves. Okay, if a number doesn't help you make a financial or operational decision, it's entertainment, not data. Ah, yeah, that's the key. Quick fund exercise, write down all the metrics you currently track, apply the 3 filters, money link, actionable, comparable, keep the top 3 to 5 that pass, add them to your weekly metrics dashboard. Okay, so there's the example of legacy video, gross margin, LTV to CAC ratio, average revenue per client, monthly cash flow, revenue per employee, everything is nice. Great. The next, I got this point here. Okay, so I get the clarity here, and what I have to do now for my own business or business is that I have to write them. Okay, I make the tracking sheet that it would be great right now. Okay, it is on the graphics. So with thumb, I will done this thing, coming back with margin, weekly habits, enders, weekly habits. This as well. So weekly habits. Something to copy. Yeah. So I can upload business. It's fine. I know the bottom whole green metrics. Right on general with 3 section. I view this one. Okay. On my 3 metrics in vanity, gross margin, activity, and yep. My financial habits. I will review number of numbers every Sunday. I would track real ROI before every expense. Okay. And I don't measure success by profit retained or like scaled. Okay, guys. I have to write it down. I think so. These things in a journal or the workbook. You can go here and do this in profit. What's the topic? Yes, so, profit growth, vanity metrics, profit growth, vanity, profit, vanity, and financial methods. So we go here, this workbook, profit, vanity, and financial numbers. Okay, so my definition of the profit versus growth, um, profit generate your business your value, while growth isn't growth is there, but costing you costing your profitability. Ability. Like I can say such as get it the increase such as effective and implement on the revenue of $1,000 for the cost increased by 2,000. Okay, again, so that $10,000 and the cost increased by 20,000. Then this seems a growth in revenue, but it is not profitable right now. So we have to look into this thing. And what's the second thing here? Which is vanity and real value. Real value, okay. Financial real value. Okay, yeah, this is the thing. We can see that vanity versus real value. Vanity is our is superficial value, while real value is the full value of your business. You can say that this is the value, real value, what your business will take in reality, while the vanity is can be the perception guardrails will actually tell you the nice region. Okay, so there's a thing. And so there's item and description. And here we have financial efforts. Financial efforts. Financial efforts. Fi- Finance, finance related members. Let's say the year two, right? Normally to keep your finances in good health. Okay, so what it is like action. What we have to do that. Uh, okay, here we have these things. We should know about it. Hello. Okay, a real metric is one that uh, is one that connects directly to cash flow or profitability can be improved by your team's action and so there's some key thing here we can compare to YouTube and look this one. Okay. Give filters to identify real metrics. You can put it in notes. Put it here. Oops. It is money look to identify if identify is really real what's real metric or not real metric. Then it has money link, has money link, actionable. We can take clear action and is comparable over time. There's it's very important. Yes, I write right here. So these are the things we have to know about the financial, identify if it's real or not. Okay, so there's the king. We can do this same this one. Okay, so here we go. Like a matrix, dashboard, Google Sheet, Notion, gross margin, revenue, COGS, uh, consistency. Should I? Okay, okay, gross margin, this one, this one, this one. And this is, yeah, your vision, CPO, so everything is nice. Considering the really good numbers or information. So what I have to do, I have to make this thing over my notebook. Okay, so I can go here, agency matrix, agency matrix. This one here, LTV, and put in here, average revenue right here, monthly cash flow here, and revenue. So here my question is how to know about this rev monthly cash flow to measure it. I got this thing how to measure this, but there's a little bit confusing. Perfect. Okay, let's focus on how to actually measure cash flow. Cash flow is the cash inflow versus cash outflow, mhm, over time. Measure. Okay, so this is the overtime measurement. Then I can say that is October 2025. Then I will say that it will be like November 2025, December 2025, so on and so forth, January 2026, so on and so forth. Cash flow is this. How to measure the cash flow? Here is the formula. Uh, uh, Cash flow is cash flow equals to cash inflow minus cash outflow. Cash outflow. Mhm. Cash outflow. So that's it. Time. So time period. Hmm. Yeah, that's the thing. Profit. It's only how much liquid actual liquid move. Uh, Liquid money move, not profit or paper. Profit, not equals to cash flow. You can be profitable, but it still run out of cash if you haven't collected payments here. That's the key thing. That's the key thing. Formula monthly cash flow, cash at the end of the month, and cash at the start of the month. This happen this way. Okay, if positive cash increase, you are generating cash. If decrease, you're burning cash. So, yep, my structure of a cash flow statement, operating activities, investing activities. What does this mean? Operating activities means that flow, core business flow. As present the three movement, core business cash flow, daily operations, and payment salaries and inactivities. Investing activities. Buying, selling long-term asset, buying the various financial activities, capital loan, owner investment, loan received, monthly cash of all three, operating, investing, financing. Capital loan movements, owner investment loan, okay, investing, buying long-term assets, something like that, equipment, selling property, operating expenses. Uh, what about the revenue? I think the finances come in the revenue as well, because one of the financing activity is also the uh, revenue. How to measure step by step, get starting and ending bank balance. Okay, this one. Uh, Break it down by activity, operating, investing, financing, loan. Eh, is this business running on loan? Where is the revenue? I think so. There should be a good revenue, so this loan should be more. Okay, more. Okay, more profitable. Like changes, okay, operating cash flow versus cash burning, operating cash flow. Okay. Core business daily operation plan payment and suppliers. I think so. The revenue comes under the operating. Okay, one payment, like this one. Operating cash flow, cash burning, right, one way, current cash monthly burn rate. So that's very important as well. activities. So get starting the ending book, January 2012, closing positive February 12th. This is the opening balance and this is the closing balance and opening balance. So we are negative in this operating outflows 2000 net in investing outflows. It invests in something down this one for receive and then no payment 1500 total cash flow total cash and this net. So we might have to copy this one. Also the monthly maintenance by cash for cash flow. Okay, I think so. We are good to go with it. This is the each cash flow uh measurement. Now, what we should do, we have done, I think so, this part well, and we have to move forward now with the before stuff. We done this financial habit. We have to measure financial habit, but what I have to do here, this last thing is really financial habits. Yeah, there's the thing. Weekly every Sunday keeps your first matrix, one renewal matrix focus, each record matrix goes partial three financial habit. So that's the thing we have to make sure, have to get into this thing. Yes. Mm, yeah, attention. Yeah. This is the financial habit. Here's the financial habit we already have here. So we've already done this uh quite a lot. And I think so then we have to start on this part of understanding value creation. And this is the Day-4 stuff. And yeah, how ideas become profit versus why. Numbers equals to five. Identify three parameter numbers. Okay, we will have this part. So we will start it out in the next session, hopefully. So stay tuned. So that's the thing we are looking to do. We'll show you guys what we are going to work on. This part, we are going to work on this part. Okay. So there's the key. I think so. I have to make uh, this financial habit page, which is J J3 deliverable. So this page contains like your profit versus growth, which is profit. We only be written this thing here. Okay, so there's the thing. Second part is the vanity versus real value. Vanity versus real value. There's the key. And here is my understanding of this concept. Vanity versus real value. We can have a look into this thing as well. Vanity, vanity just like number of followers or something like that. If it doesn't show up in numbers, then it's vanity. Yeah, my understanding of vanity. This is revenue, uh, number of followers, etc. Real value, the customers, there's profit, ROI. So, so there's the thing. And the last part is the average there. CVP. That's very hard in reality, and I have to commit it. So I can say that I will weekly check my real value metrics of my weekly, weekly, monthly, quarterly, and yearly real value metrics of my agency company and for my clients, business investments. Okay, there's the thing I will start doing from today, and I will track regarding before expenses every every Tuesday. You can see it. Okay, because Tuesday, well, let's just start from Tuesday. You can say 9th and 10th. It was the day 5th of every month, quarterly, um, 5th of quarter, month, and 5th of January. Okay, so there's the thing I will do, and it will help us a lot. This is my commitment, and like fact check and improve my rankings. So this is the deliverable for the three. I think so. We done a good job here. Okay. Okay, yeah. Mhm. Nice. So understanding value creation. Now we have to start this part soon after a break, and then we will have the this. I think so. We have to get this one as well and this one as well by the time. So yeah, thank you so much, guys, for your time, and we're going to start our that full day stuff after a break. Thank you.